Hi, Bo here from High Tech Investment, and welcome back to the channel where it is time for another video. This time around, it is one that a lot of my viewers has been wanting to see for a time, basically how we set up our portfolio. And as I was doing the tutorial itself, I figured out that I had to go a bit further back to basics, not just showing exactly how we set up our individual trading accounts, but all the hard work that actually went into it long before then. Obviously, sometimes we forget because this lies on our backbone. It is something that we always go through. But as new traders, this is something that you definitely have to adapt to. You have to ask yourself a couple of hard questions. So that is what this video is all about, getting the basics right. I recently also did a whole video series on grid trading. And again, the first couple of videos is all about getting the basics right, because otherwise from there on, you are not really going the way forward that you wanted or thought you were going to do. And the same thing here, if you want to build up a portfolio, there's quite a few things that has to match up. And I'm here to try and tell you the 8 most important items. The first 4 you actually see here. So this is the diversification that you have in here, and there is multiple different ways of doing that. We're going to go through some of these things here today. We have the very important point as a Forex trader. So again, the risk management in here, and that again also based on what type of risk that you want to take goes on to the third point here, selection of expert advisors, because again, depending on the risk, depending on what type of EAs you have, all of these things are obviously different. And then you have the regular monitoring and rebalancing of these EAs in here. That is even more crucial in order to get the most out of your EAs, to make sure that they are basically performing within the risk that you have set out for yourself, and at the same time hopefully also will give you a bit of profits. The next part is actually the market research and analysis. Now this one is not necessary for everybody and every EA, but again depends on what type of EA that you're running. And as this is a basic tutorial on the first things that you need to know, we're going to go through this to see which ones is actually good for this and other ones where you can more or less ignore it. Then we have the goal and strategy accomplishments. So obviously you need to know the goal, you need to know when you want to start, when you want to finish, what you want to achieve. So all of these things is obviously quite important. And then you have the most important one is actually the continuous learning and adaptation, because again, in the Forex world, there is quite a few things happening every single week, every single month, and every single year. And you have to adapt to these items here also. I know that there's a lot of people that think that they can just have one E, set it up, and it'll work for the next 20 years if they have the right settings. That is simply not true. So all of these things is very, very crucial. And then the last part is also the backtesting and the performance evaluation again that we're going to go through. So I hope that you're going to stay all the way to the end of the video, where hopefully you'll be just a bit smarter. So the first part here is the diversification. So basically spreading your investment across different currency pairs and also on different strategies to minimize your risk exposure, and basically making sure that your portfolio includes a mix of major and minor pairs in here. So the majors are normally the US dollar pairs in here, similar to what you see below. I have made a little portfolio just to give you an example. So for example, when you have Euro USD, you have New Zealand Great British Pounds, Aussie Swiss francs, and then the Canadian versus the Japanese. You can have that one currency pair in here. There's no 2 euros, no 2 US dollars, etc. down here. So that means that if you have a trending currency pair, like we had, for example, with the US dollar, both last year and again this year, you have, for example, a trade war, then where you have all of a sudden Mexico, Canada involved in this particular one in here, then you're not fully exposed to the US dollar, you're not fully exposed to the Canadian currency pair. So you have other ones that can basically weigh up and cut some of the slack, some of the drawdown that you might have on these portfolios. So this is crucial. I have another one, as you can see below. Again here, Aussie CAD, Swiss francs, Japanese, Euro, Great British Pounds, and New Zealand USD. Again, there's no overlap in here. So this cannot always be done, of course, because you also have to consider exactly if these particular currency pairs is actually performing as they should. But it gives you a good idea of the diversification that has to go in here. You should not overexpose yourself. So again, if you have one or two currency pairs in here on the Aussie or the Canadian, so be it. But again, you have to be cautious and you have to be aware that you have to limit it as much as possible in order to basically minimize your risk exposure also at the end of the day for one particular currency pair. On the risk management, you have to establish your basically clear risk parameters, and those can include obviously the stop loss and the take profit levels that you want to have. This is mostly for individual trades, so one trade at a time. Or in cases of grid trading EAs, you have to establish the drawdown level because they don't work out, most of them, with stop loss and take profit. They continue basically to trade all the way through. So what do you do? Well, if you have an EA that just trades one at a time, then I suggest that you don't risk any more than 5%. Normally, most traders would prefer to have somewhere between 2 to 5% of risk per trade. All depends on, of course, the size of your account. So you need to calculate exact lot size, what you're going to start off with. And part of this is obviously you're going to test it also on the demo account to see if the numbers are actually matching up with what you were expecting to risk at every single trade in here. The next part that you also have to consider is try and go for the small stop loss in here. If you can find currency pairs, not all of them of course have the same setup, but the currency pairs that are working well with the small stop loss, you get out of the trade very quickly, you don't lose too much money. And then try the ones that hopefully will also reward you for the big take profit targets that you put in. Basically, when it gets it right, it cashes in big time, and then when you get it wrong, you only lose small little things. For the grid trading EA, again, it is important that you set your parameters. What do you want to actually maximum have in drawdown? Most of the time, most people will say somewhere around 10 to 20%. Real professional traders in hedge funds and everything else are certainly more conservative, so they are looking around 5. And we are willing to take normally a risk of 10 to 20. If it's beyond that, we try to basically limit the EA either by lot sizing, grid sizing. There's different ways of doing this. And then the last part is also a very important part. So determining the appropriate leverage used again here. And it depends also on the EA you're actually going to use. For just single trading EAs in here, 20 to 1 or up to 100 to 1 for a single trade is a good leverage in here. You don't really need any more than that. But if you are grid trading, similar to what we have done for quite a few years, and you can find a lot of our results on the high-tech investment website, then you'll get at least 200 to 1 and all the way up to 1001. That definitely makes perfect sense. We have been trading a lot of the different accounts with the 200 to 1 on IG demo accounts, and basically bigger, and that has worked out quite nicely. So they have been reasonable, but I definitely suggest that you go to 500 to 1 if your broker will actually allow it. The next part we're going to have a look at is the selection of the expert advisors EAs. So again, you have to choose the EAs with a proven track record and robust performance history. And one of the things that we can actually provide at High Tech Investment is a whole range of EAs on our website that is showing trading. Some of the older ones have been trading for several years. Other ones have been trading for 6 to 12 months. And obviously some of the new ones we are still testing very much. They are still in an early testing phase, only a couple of months old, but we are starting to get a feel for them. So that is very important. And some of the EAs that we have tested over time, you'll see on the screen here also, the Profit Retriever, Wave Liberator, HDA, RSI Liberator, Lucky Trader, and Simple Grid Trader. And now also the Simple RSI Trader, which is a one trade at a time EA in here. So this particular one is good for the US market. We have given in the news report that we do every single week, we have given a bit of an update on how that goes. And then also again, consider variety of strategies, trend following, scalping and grids discussed that we have in here. Don't necessarily put all your eggs in one basket where you are only using your portfolio here as a grid trading one. Again, try and get some trending in, for example, the trend following. So could be the Make Money EA from Expert Forex. So that actually works well in trending markets. You have the grid for when everything goes sideways. And then you have, for example, the new simple RSI trader also here to cover one trade at a time. So again, you expose yourself to various strategies, very healthy portfolio setup. Regular monitoring and rebalance of all these EAs is actually crucial. Now you have to keep track of your portfolio performance, and then you have to make the adjustments needed to align also with your financial goals in here. And we're going to go into a bit more detail later on in this particular video here. So the best way to do this is normally add all your accounts to FX Blue. You will notice that when you go on the High Tech Investment website, we have a lot of FX Blue accounts, and basically they cover both all our demo accounts, and then we have obviously our FX Blue live accounts also in the background. They are not on the website. And again, from there on, we also show you the weekly and the monthly profits in here. You can find them both on the websites, and we also talk about them every single week. You can see which ones are the top performers, both on a weekly basis and also on a monthly basis, and that will give you a very good idea. Start determining which currency pairs for which EA is actually working over long periods of time. That's what the videos are all about. And then you have to rebalance the portfolio, so periodically, also to make sure that you have the desired level of risk and return. So if you have again some EAs that are coming in and delivering a high profit, obviously you want to keep them. The ones that are falling behind or getting into high drawdown, you want to remove them and see if you have other currency pairs in here that you can basically switch them out with. That's why we are running normally around 16, 20 or 22 accounts on demo here for all the individual EAs. So they are always running on the side of our live accounts, and we pick and choose the best ones that are working currently. You shut the other ones down, put the new ones on the live trading accounts, and that's why you keep your profits high, and then hopefully also your risk low when you can see that they're working over long periods of time. Definitely, as I mentioned already, check the drawdown regularly, and that is also something that we do as we are putting all our portfolio together. We always measure again the weekly and the monthly drawdowns in here, and we also take the ones that are the worst ones that basically go back into the hospital in here. We're going to try and redo them by doing more backtesting, and then hopefully they will recover. The next part is the market research and analysis in here. Now, this is not for grid trading EAs. Basically, I have to tell you about that straight away because you have a lot of economical news and events that could basically influence your EA in here. When it comes to the grid trading, this is normally continuous trading, so it's not something you switch off, but it does have a big effect. If you have set up your EA the correct way, that only means that you're going to have a bit more money, because normally when you have the news, the fluctuation comes out, and that's where the grid trader is actually quite well cashing in very, very quickly. So sometimes, especially Fridays, can be very profitable, but you can also have some news sometimes that actually ends up with a long trend. So you've got to be making sure that you have your basic set for your grid so that you don't get yourself into trouble. Now, the single trade, well, they should normally be stopped because, as I mentioned before, if you set it up right, you have small stop losses and you have big profits if you want to take the chance. But in these particular cases here, a lot of the manual traders, they don't want to trade through this particular one here. They want to have a more normal Forex market. But that's, of course, entirely up to you. If you want to have a chance of it, then I suggest that you do, as I mentioned before, put in small stop losses so that you don't lose too much for the trade, and then go for a higher profit at the end of the day, so that you have a very good balance. You lose only a little, but you gain a lot if the price actually goes against you when this news comes out. So again, you use both technical and fundamental analysis to guide your portfolio decisions in here. So it's a crucial part, but as I mentioned, only for some EAs. Goals and strategy alignment is also incredibly important. You need to make sure that you have all these things in place actually before you ever start trading. So clearly define your financial objectives in here. You know, is this just for normal growth? Are you going to try and create an income that you can actually live on for long periods of time and can be sustainable? Preservation of capital, you name it. So I'm sure there's quite a few different things that people are looking for. And basically the first thing that you need to consider is, what are you willing to invest? Because at the end of the day, you should not use, obviously, money that you will have normally for food or everyday conveniences in here. It has to be some extra money that you can put aside. Otherwise, you're going to obviously risk your livelihood, your family, and everything else. And that is certainly not something that we can condone. And then you have to go in and figure out, how long do I want to do this? Is it only for a short period of time? For example, if it's only for 6 months, one of the EAs that would not be very good for that would be the grid trading EAs, because they can take a couple of months, even up to 3 months here, before the drawdown that they normally drag after themselves will start providing some money. When it comes to the equity of your account in here, the balance will go up, but because of the drawdown, you end up basically with a lower equity than you started off with. So if you go in, start off with this, and then want to take your money out again after 2 months, you might actually have lost, even though your balance has increased by 5, 10, or 20%. So it's very important that you figure out exactly for how long you want to trade, at least set up the goals. If you're looking for 2 years or even 10 years, as I wrote in here, then grid trading is a great way of doing it. You basically have all the options open for single trades or trending, or if you want to have grid trading, that's more than enough time to recover, absolutely. So these are some of the things that you have to ask yourself. And again, align your trading strategies and EA selections with these goals. So as I mentioned before, monthly profit also for the goals. What are you looking for in here? We have professional traders. They are happy if they can match or slightly outperform the S&P 500 in here. We are basically believing that we can do slightly better. Normally, our aim is somewhere around 8 to 12% per month. Some months we are actually getting 5%. Other ones we are lucky enough to get 10, 12, or even 14. But on an average part, we don't want to risk too much. We want to have a good, steady income. And you have to put down the goals straight away. How much do you want to try and do? Is it 5%, 10%, or 20%? So 20% is already very high risk if you are asking me. So what you should normally do instead is try and build up your portfolio into different blocks. And I call them here low, mid, and high risk accounts. Try again to put a percentage on them. So for example, on the low risk, where you have doing about 5%, maybe 8%, so a month, you can put 50% of those particular ones in the portfolio. Then you have 30% on the mid-range, so the one that are making somewhere around 8 to 12%. And then you have your high-risk one, the ones that could give you 15 or maybe even 25%. But again, limit that to maybe 15 or 20%, as I wrote in here. So you need to have a nice balance with this in this particular one. There's no need to have 100% on the 5% only. You should try and diversify a bit, and obviously even some of the 5%, they might even go lower and the other ones might pull you up. but it's entirely up to you how your risk strategy will be. But something similar you need to ask yourself. Continuous learning and adaptation is actually crucial here also. Stay updated on the new developments in the trading strategies and technologies, especially here at the moment. As we hear, there's a lot of AI coming in, AI trading. Well, we haven't seen too many of those that are doing extremely well and where you are surprised that they're simply cashing in all the time. That might still be a bit too early. I know that a lot of people also use ChatGPT to try and get them to build up a nice EA based on individual basically signals. But anyway, the new EAs that are coming out, obviously try and understand what these are all about, how they are built, how they enter the trades, how they exit the trades, and obviously how big a risk that the developers has built into these particular EAs. And then obviously have new updated versions of this. We have good examples of the simple grid trader from Expert Forex. Started off here with generation 1, very quickly was developed to generation 2 and 3. And we started to basically trade with the 3 one. It was very nice. It did about 10%. Then we had a generation 4 that came out in version 1. And now we have the second version 2 in here. We are still trading on the generation 3 and also the generation 4, but only the first version in here. So we have to learn all the new features before we actually apply them in here. So that is crucial. So normally it can take definitely a couple of weeks. It can take a couple of months sometimes also in order to make sure that we actually tune and align the new EAs, because the settings might be completely different. The algorithm in there is different also. So you have to be willing to adapt to your portfolio strategy as the market conditions and maybe also your personal circumstances changing. So maybe you need to have a closer look at your risk level, what you need to change in here, if you have to lower it, or if you think that you might actually want to raise it a bit, you're not making the profit that you should. Again, this comes down to a lot of different things in the Forex market that you don't have any influence on. And some of them here is definitely the trending markets that we have seen now in 2024, a lot of, and definitely also here in 2025, especially on the world situation. We already had quite a few things happen in the beginning of 2025 here with the trade war, which is still very much ongoing. Then obviously we again had changes and adaptations into the Ukraine-Russian war, and now also here with the Israel and Iran war. Again, things are definitely moving, and obviously also oil prices, gold prices, US dollar is actually the lowest versus, for example, the Swiss francs here. So the entire world situation is something that you have to basically consider. So minimizing in this particular case, especially the US dollar here at the moment, is a good idea. Could be other exposures to other currencies later on, depending on what is actually happening in the market. And then adapt your individual EAs. So for this particular market here at the moment, maybe use some like a trending EA for the make money EA. We are definitely going to have a closer look at this particular one, because I think it will do quite well in the market that we're in here at the moment. Or you can again also adapt it. So not only with the trending strategy, but you also have your sideways markets. So this is your grid EAs. This is what they're best at. So they will be able to take the fluctuations in and cash in, no matter if the price goes up or down. So that's the great part of them. And then obviously there's also other items to look into. So basically scalping strategies. You have some EAs that will cover that particular part, and scalping strategies is basically taking small bits of the market here, so very short entries. So you can maybe do something like 5 or 10 a day. So that's what they are doing. Or we have day trading, which again is normally you trade day by day. Everything is closed at the end of the day. These things might happen over a couple of hours in here, but everything is closed at the end of the day, meaning you will have no drawdown for the next one. And that also means that you don't have to pay swaps in here. Then we have most of what we do is the swing trading. So this is normally something that goes on for at least minimum some hours, but most probably it is more a couple of days at a time. And sometimes with the grid EA, it could actually be weeks where you have some open positions when you have a trending currency before it actually returns to where you can get out of the trade again. And then we have the long-term position trading in here, where we are not talking about hours, we are more talking about weeks, months, where it is long-term trading in here. And there's not so many in the Forex market going that particular way. That will also be too expensive with the swaps over long periods of time. Backtesting and performance evaluation is something that you obviously should consider and you should continue to do. You should conduct the thorough backtest of the individual EA so you actually understand the behavior and some of the items that it might be the same EA as we spoke about, but different versions also has different ways of actually working and operating. So even there you can diversify again. For example, as the simple grid trader, generation 3 has one setup, generation 4 is actually different again in this particular perspective. So that means you have completely different settings even on the same currency pair. So that is another way of spreading your risk. So because they might not get in trouble at the same time here based on the behavior of the EA. Then when you are testing this, I see a lot of different testers. They are basically testing for long periods of time. You also see some of the producers of these EAs showing backtesting of 20 years and how well they're doing. And obviously this is not really something that we believe too much in, because we know the market is very diverse. It just changes all the time. We have already mentioned in many of our videos here before that somewhere between 4, 6, or even 8 times a year you will have currency pairs really trending hard, and obviously have settings that work for all these different currency pairs over a 20-year period. It's simply not doable. So do not use long testing periods. Use different testing periods for each type of EA here also. For example, on most of the grid EAs that we have, we normally run test at a maximum 6 to 8 months. We know roughly when we had the last trending, and we want to try and pack that in our testing period. We know, for example, that in 2024, we had some Swiss francs in August that was trending heavily, but now that is quite far behind, so almost a year, 10 months or so. So that means now the next one is in October, where the US was trending. We also know that again in March and April, due to the trade wars, there was another huge hike in the currency pairs in here. So you want to include those, and then obviously up to the last part. So all these things are quite important. For example, on the single entry, the RSI indicator, so overbought, oversold in here, we don't go that far back at all. We are only using 2 or 3 months because this will also change as the market are changing. So there's no points of looking at this. That will actually only confuse you even more. You have to be ready with these shorter testing times for some of these EAs in here in order to actually maximize and get the most out of the individual EAs. Evaluate the performance metrics to ensure that the portfolio is on track here to meet your goals. This is what I mentioned to you before. This is something that we are actually doing on a weekly basis. Every single week we are assessing everything through the FX Blue setup that we have, so we can very, very quickly see which ones are working, which ones are not, which ones might we have to basically grab and remove from our live portfolio and then replace with something that is actually working a lot better. So all in all, building a portfolio comes with many different things, and this is only the first video in a range of series trying to show you and get you started on your own portfolio and how you have to look at the trading strategy. So this is basically our trading strategy. So with all the different things, so the diversification in here, the risk management that you have to figure out yourself. Where will you be? The selection of the expert Forex or any other EAs. You can obviously take it from different suppliers. It doesn't have to be from one, but make sure again you have different types of EAs in here. You have to regularly monitor and rebalance your entire portfolio. We do it on a weekly basis. I certainly suggest that you do it either on a bi-weekly or no later than every single month. Then obviously market research and analytics in here. Again, not so much for the grid trading, but definitely much more for simple traders like the RSI, things like this, where it is most probably better to stay out of the news cycle. Then again, goal and strategy alignments in here. Make sure that your goals are right. They are actually achievable without blowing everything up, without losing too much money that you need for something else. And then very, very important, continuous learning and adaptation in here. Make sure that you keep this flowing and changing all the time. And then obviously your backtesting and your performance evaluation. That is crucial to make sure that you know exactly what needs to go into this particular portfolio here. So I hope this run through of creating a portfolio, what you need to basically consider, what you need to take into account. These are some of the basic things that you need to ask yourself: where you want to be, how long do I want to be in the game here, and then it'll start to make sense for you exactly which EAs to use. Currency pairs and everything else, this takes time to find, but obviously we are here to help and assist. So you can find a lot more details and information on the High Tech Investment website. All our EAs, all our FX Blue accounts, everything is for free. You simply go in there, have a look, see one's works the best. You can have a look at the drawdowns to see if this is too much, too little. And obviously there's also an opportunity to go to the Expert Forex coupling service, where a lot of our signals is already on there. But at least you now understand also the risk that we are willing to take, so that you will have a very good idea of how we actually trade. But don't forget, you and you alone are still responsible for your own trading, your own investments. So this is not investment advice. This is simply just showing you how we do it, what are our concerns and what we need to answer in order to get the trading started, get the portfolio set up here. And then in the next couple of videos, I'm going to show you a bit more exactly on how you can get a lot more out of the money in here, how you can create new portfolios in record time. So I hope that you will make sure that you also give us a thumbs up and hopefully a comment. So if you have something in here that we haven't covered yet, but most probably you would like to see in one of the future videos, then please write it in there. We are happy to try and include it if it is possible. So I hope to find you on one of my other videos very, very soon. Until then, bye bye.